Good morning, everyone, and welcome to the European Crossover webinar. And another day and another high in equities. Actually, we saw new highs during the Asian session. You can see here with the S&Ps push it all the way up here to 33, 36 and a half. And actually, they're led by the charge by the NASDAQ. It was actually the NASDAQ that was poking ahead higher with some speed, and that pushed up the S&Ps and kind of stalled a little bit there. We pared back just a little bit, but we're still in pretty good shape. And these S&Ps holding up, actually holding up really just above the day's highs yesterday here. With that, we saw Dalian recover just a little bit, not a whole lot. We didn't even quite even take out yesterday's high here on, if you see here in the Dalian. But we've kind of eased back a little bit. We did have some more news regarding that coronavirus, and we've pared back just a bit, but not a whole lot. And also looking here with the peso, I'm a bit surprised we didn't see an even further move here in the peso. We have recovered a little bit, but considering how oversold the market was, I'm surprised that initially when equity sold off that we didn't see a greater rebound of just general short covering. The euro dollar, they barely had moved higher yesterday. You can see here before getting pushed right back down. It certainly looks like this market is just heading lower. Obviously, not obviously, but we will have the ECB on Thursday. Certainly there could be an impact. They could change it, but at this point it doesn't. I don't see where that would want to come from at this point unless Lagarde puts on a full-on hawk suit. I just don't. It just doesn't. It's not adding up at this point. I mean, it's just every opportunity to push this market down. And as we mentioned last week, is that those once we were to get below 1105 on that close, that would really just take the wind out of the sails of anybody that would have been bullish. So it wasn't if people were going to, clamor to get long again. I mean, we had made a move up here. We didn't even quite make it 1120, and they just saw that as an opportunity to just push this market right back down again. And dollar index continues to remain here just above that, this breakout area here. So still looking good for the bulls. I mean, in the sense that we would need to get above 97.89 to go full on bull mode. We've held our own here, but it isn't as if we've ripped up, although we've gotten above this 97.42, and that has actually coincided with us breaking this trend line. But it hasn't been like as if the market's turning around and taking off. Now, we would go full bull on mode if we did get above that weekly pivot here, 97.89. But we shall see what happens, what materializes as the rest of the week goes on. And coming into today, we've had Italian industrial orders come out down 0.3, and sales come in flat. At the bottom of the hour, we are going to have UK data, and rolling here into the States, 8:30 Eastern National Activity Index. And at 8:30 Eastern also we'll have Canadian CPI. Monthly home prices and existing home sales. And we do have Bank of Canada rate decision. And, I actually forgot to even mention, had a pretty nice little run here in Canadian dollar. We actually came up to our bias chart resistance. We actually think in our analysis we had two levels, and you can see here we made it up to that one. I think that was yesterday, which was, we had 30.94, so I made it up to 30.92. We pared back. But remember, we never quite made it there last time, that run up to 31.13. So we'll have to see how things pan out once we get the BOC, but we shall see. And with that, we'll go on and take a look at a couple of stories and see where we stand. The yen, Australian dollar struggle to wipe off the coronavirus concerns. And that was the yuan, not the yen. The yuan dripped, and the Australian dollar hit a 6-week low on Wednesday as investors feared the outbreak of a new coronavirus in China could create more headaches for the Chinese economy, which is already slowing because of the U.S.-China trade war. The virus, which caused a type of pneumonia, has spread to cities including Beijing, Shanghai, as the number of patients in China have more than tripled. More cases were also reported outside China, including the United States. The yuan was steady after dipping. I don't know why I said dipping, but anyway, dipping earlier. It fell about just a little over half of 1% on Tuesday, its biggest decline in almost 5 months in onshore trade. It also stood at 6.906 for the dollar. The Aussie dollar, often used as a proxy bet on the Chinese economy, fell to a low as 68.27, a trough last seen in mid-December, and last stood at 68.37, down 13 tenths. The concerns surrounding the little known virus popped up the safe haven yen, which is firm at 998 yen versus the dollar. The newfound virus evokes memories of the 2002-03 outbreak of the severe acute respiratory syndrome called SARS in southern China, which killed nearly 800 people globally and led to a sharp downturn in tourism in Asia. Some say the impact could be felt more severely this time, given the Chinese economy is now several times larger than it was in 2002 and 3. On the other hand, with the limited information available and the extent of the pandemic, the market participants had little to chew on for now. There's certainly something companies need to talk about for the contingency planning, but financial markets, there isn't much to make a thorough case for trading in either direction, given the lack of further information, said Ayako Seta, market economist at Sumitomo. Tohu Sasaki, head of Japan Search at JP Morgan, said that while the SARS outbreak caused a massive economic downturn in Hong Kong and Singapore in about 8 weeks through a drop in tourism, the pandemic had little impact on supply chains in Asia. If the latest virus breaches of similar magnitude, some economies such as Thailand, Singapore, and Malaysia could be negatively impacted or affected by drop in tourism, but its long-term impact on the global economy and currency markets will be limited. Euro stood little change at 10.83, sterling at 30.40, having gained a tad on Tuesday after data showed the British economy created jobs at its strongest rate in nearly a year in the 3 months in November. Strong data slightly dented the expectations of the interest rate cut for the Bank of New England at the end of this month, though markets are still pricing about a 60% chance of a quarter basis point cut. And the death cross growth abroad threatens the U.S. dollar. Storm clouds are gathering over the U.S. dollar, threatening a 2-year rally in the currency that squeezed corporate profits and angered President Trump. Dollar bullishness in futures markets stands at its lowest level in more than a year and a half. According to the most recent data from the Commodity Futures Trading Commission, analysts at Bank of America Merrill Lynch say the dollar triggered a so-called death cross on the last day of 2019. The bearish technical formation occurs when the 50-day moving average crosses below the 200-day moving average, something that has been followed by a period of dollar weakness in 7 of the 8 instances since 1980. The bank said in a recent report, easing worries over global trade and the Brexit are stoking investor appetite for the risk, pushing them out of the safe haven assets like the dollar. The global economy looks like it's healing. Reduction of uncertainty will likely allow investors to take risk because the dollar's central role in the global financial system. Gauging its path is important for corporations and investors. Over several years, the currency has withstood a number of factors that analysts believe would put it lower, including a dovish turn by the Federal Reserve and fears of a U.S. slowdown. The dollar index edged 0.2 higher last year and was up 10% from its 2018 low. UBS, Schroders, and Societe Generale are among the banks calling for the dollar to fall this year. Double Line Capital's Jeffrey Gumlach has also told investors he believes the dollar's next big move will be lower. The book's long stay will near the top of its trading range has weighed on the balance sheets of multinationals. The Trump has complained about the dollar's strength in part because the U.S. products are less competitive abroad. And let's see here, currencies. BNP Asset Management believe the trend will reverse. He is betting the dollar will fall against the euro, Japanese yen, and Australian dollar as growth in these countries accelerates and their central banks raise rates. Few central banks appear already to be shifting their less dovish stance. The RBNZ surprised investors when it left rates unchanged at its November meeting. The European Central Bank, for its part, has signaled that it's done cutting rates for now. And Richard Benson likes a range of emerging market currencies. So we shall see. With that, let's go on and move into the analysis. So starting with the euro, after a failed rally to 11.18, the euro closed on the day's low, sitting on the trend line. The path of least resistance is clearly lower. The resistance is now the 11.20. Support is 10.56, followed by 10.20. Two consecutive closes below 10.56 will break the trend line with a head and shoulders target of 9.17. We've had this one in place for a few days here. And that's where it goes to. I think Amanda's looking at the same thing, but I think she's spying 897. But you can see here now we're just below this trend line, not much, but like I said, two consecutive closes below 1056, and that would seal the deal here. We shall see. And that would play in line because if you think about it, today's Wednesday. So let's say that we were to close, 1050. And then we still have the ECB on Thursday, and then the market will decide what it wants to do at that point. Let's say that Lagarde comes in a bit hawkish, then the market would have an opportunity to move back higher. But as I said, at this point, our support is going to be 1056, followed by 1020. And let me get out the bias chart. One moment. But as I mentioned, two consecutive daily closes below 1056 would now push us to that head and shoulders target, which would be 917. Let's go move into the cable. So cable closed higher for the day, and that was on Tuesday, reaching the level of 30.81 on the backdrop of good employment data. Resistance will be Monday's high, which is right there at the 30.81. And a close above 30.81 would allow a test of 31.66. Support comes in at 29.90. So we're kind of in a rather tight range, kind of stuck in the middle, so to speak. We've kind of vacillated from this 29.80 up here to beyond 31, and then roll back down the hill. Then make another stab back up here. And rather quiet trading today right now. Resistance is going to be 30.81. And it's just going to be yesterday's high. I think the high might have been right at 30.80. If we can get a close above 30.81, once again, it'll open up the door for a challenge up here at 31.66. We can tack on to that, but you can see we're trading, very quiet at this point. And support 29.90. Well, the Aussie closed below the key support level of 68.48. And you can see that right here. And that's been key, to say the least. Key also, not only from where, from a horizontal standpoint, but you can see now, here we are sliding, making an attempt to even challenge and go below this trend line. The pair is now open for a test of 67.68. Minor support comes in at 68.17 with resistance at 68.86. The pair would require 2 consecutive closes above 69 cents to arrest control from the bears. And remember, we talked about this since last week. Quite a few people were really laying bets, obviously because of the situation with the brush fires, which was just adding on to more pressure for a potential rate cut. But don't forget, we've had very weak consumer demand. So they were laying their bets on for potential for this market to continue to move lower. And then we saw that rally come in. You saw the market turn around and then make that run up here above 69 cents before finally sliding back here. So they're a little bit put under pressure a little bit, but the market did give in, and from there we've been working lower to the point that we are now. So all those people are now in the green now after being in the red. So for today, it does allow movement to 67.68, but for today, support's going to be 68.17. Okay, let's go and look at the Kiwi. The Kiwi finished today slightly lower in a tight session range. Support remains 65.72, followed by 65.44, which is a 38% of this entire move from 62.01 to 67.56. Resistance will be 67.46. So we're just continuing to drip a little bit lower. We still haven't even made it to the 65.72. I mean, we're trading in a very tight range. And then we've got 65.44 right there. We're going to go and keep that 65.44 there. And resistance 67.46. Oh, that's wrong. Hold on. This would be 66.46. There we go. Still remains, quite bullish. Even though it's quiet, we've maintained, and we could easily pull back. We haven't even, forget the 38%, we haven't even pulled back to 65.72 yet. This market is still making a pretty good stand here, despite the weakness of the Aussie. Moving on to the dollar CAD. The dollar CAD remains stymied. Resistance is 30.94, followed by 31.13. Support is 30.29, with 29.89 on a further break. And of course, we do have the Bank of Canada today. As I mentioned, we had our resistance yesterday, or well, actually when I did the analysis, 30.94 before we even made this run. We came pretty close. We showed here we made it to 30.91. The resistance is going to be 30.91. As I mentioned earlier, 30.91, and then we have, remember, we didn't quite make it here the prior week, not this last week, but the week before. We almost made it to 31.13 right before the employment data, and then when that did come out, to a lot of people's surprise, we didn't get much traction at all. And here we are, and there's a 31.13 and then 31.36 here. So what we'll do is, here's 31.13. On the upside, there's that pink line there. We came up short, and 31.36. It's still bearish, no doubt about that. Support on the downside, 29.89. Keep it relatively simple. We do have this area here, but we're not that far away. And once again, with this decision, you would expect some further moves where we're going and trigger some stops. So hence, we'll go with the ranges of the 31.13 and on the downside, 29.89. Okay, dollar peso found some buying at the target support area here, which was 1865. Despite the volatility in equities, the bounce in the peso was rather limited. Resistance on Wednesday will be 1888, with support at 1869. And when equities came off, when we started finally get a little bit more traction on the coronavirus news, we did come off those lows, but this is really surprising. We talked about this the other day because we were saying, boy, if we do get this rebound, we should see a nice little bounce and potentially a move to 1905. And of course, we are higher now in equities, but I would have thought that when we were taking that dip, we would have seen a better rebound here in the peso, and we simply didn't see it. Now, whether we do get some additional news that pushes it down, but right now equities are doing well. We didn't even make it right here. Look at that. There's 1880. Now, if we do get that push, I'll tell you what, we'll just move it just to right there. It's going to be key right now. 1884. And on the downside, we'll keep the 1865. Well, let's go right there. It's actually 1869. We'll tighten it up. Right there at 69. But we are just trading in a very, very tight range. And let's go move into the dollar yen. So the dollar yen paired back with the drop in U.S. equities as markets reacted to the China's coronavirus. The pair found support at 980 before stabilizing. Resistance is 1005 with support at the breakout level of 965 followed by 942. Actually, when we saw this rebound in equities in Asia last night, I'm a bit surprised that we didn't even push higher. I thought we would make it up to about at least, I thought we'd be able to come up to 1014, maybe even a bit higher. And I think we made it up to about 1008, I believe. And you can see here, we've kind of paired back just a bit here. Nothing necessary to write home about. And when we did pair back, we found support just below 980, and we've traded in a very, very quiet range. So far, we haven't seen any further movement evidence there into the yen itself. I'm looking at some of the other yen pairs, and nothing to, as I said, to write home about. So with that being said, we'll go with 1014 on the upside. And if we do see that slide, we'll be looking for the move to 965. Remember, 965 was the breakout area here. Right there. And we got above here, and we're able to push this higher. So if we do slide, it's going to be 965. And finally, with the dollar index. The dollar index closed above the broken trend line for the third consecutive day. Resistance remains the weekly pivot of 97.89, followed by 98.11. Support is 97.29. And at this point, 97.29 might even feel like a stretch here, but that's where we're at. That's what I'm saying. It's going to be 97.29. There. Coming across these lows. If we do break here, and right now the key here is 97.89. And beyond that, 98.11. You see right there, and We had 29 here. Let's move it down a couple here. I think we actually had 29 and we moved up to 31. Now we're moving it down too. But if we were to break, you can make the case here at 42, but that's only 20 ticks away. We could easily test that and dip below it and then still close back above it. So henceforth is why I'm going with the 97.29/30 with the cash dollar index. As I mentioned, we're above it. I mean, we got above the 97.42, but other than testing the, 20 ticks higher, we haven't done anything with it, which might be a surprise considering that we've even, not only did we close above 97.42, but we've even broken this trend line, at least for now. But it's going to take a move above, a daily close above 97.89, and then I'll get us on a full-on bull mode. With that, we'll go and move into the cross rates. Okay, trend line support at the 72 level. Let's see here. Potentially where this market could go down if we do see the yen strengthen from here. But we're still trading in a relatively quiet session overall. I mean, look, we just as with the dollar yen, we're not making any moves here. I'm surprised we haven't seen the yen in itself stronger as a risk haven, especially, and on top of that, we've got the, the thoughts are whether or not that this thing could, I don't think it would develop anything as the SARS would, but certainly you never can tell. I just think that the yen, rather sanguine, if you think about it, I always thought we'd seen a much bigger reaction. And we haven't at this point. Equities continue to stay bid, although we've come off the highs a bit. So looking here with the Kiwi yen, that's going to remain the same, the 72.19 with the high at 72.80 for resistance. Obviously no movement. We're just smack dab in the middle, just sitting rather quietly. And on the downside, 72.19. Now, euro yen in itself has somewhat gathered itself, and we pushed up a little bit higher here, but I think this is more about euro weakness as opposed to yen strength. We have gathered ourselves here. We had a low for 21.62, low so far 72. So that 21.62 is still going to hold here. And on the upside, we had 22.38. As I mentioned, still relatively quiet. Still relatively quiet. We've kind of held our own down here at these lows, but the resistance is still going to, no changes here. It's going to be 22.38 right there. So no changes. And euro, we're just stuck in this range. And we talked about this yesterday, saying that this is really a battle of which currency is weaker. And at least for right now, it's certainly, despite the weakness we're seeing in the euro, the odd is more weak. And hence we're trying to push out of this range, although we're still trapped within this tight range, but we've been able to get just above this level here. And this is actually our resistance going to be right here coming at this level. This is just a very quiet market, to say the least. As I said, tug of war between the both of these as to which one. We should see some movement, though, come Thursday with ECB day. Resistance is going to be right there at 62. Let's just call it 62.50. And support's just going to come in right there. Right there. Next, you can see that coming perfectly across. And just at that close, let's call it 61. Well, actually, 61.50. I am really hoping that we can get some of these moves to shake out to get some further volatility. We're going to move into the Euro Kiwi. And we're gently moving higher. And as I mentioned, on Thursday, we should see some movement here with the ECB. Right there. It's going to come in at 68.52. 68.52 as we just gently move work a little bit higher. Actually, 68.50. We already had 68.48. We'll just notch this up just a couple of pips. And there's support right there. 67.97. Boy, we're trading. Look how quiet this is. No movement whatsoever. I mean, it's just up, down, just kind of sitting here, 67. So it's going to be 67.97. And we're just hovering just above this trend line on the Aussie yen. Look, we're not moving anywhere here. Look how tight this range is. So a 33 pip range. So obviously no movement. No difference in analysis here. It's still going to be 74.88 on the downside, 75.72 on the upside. And like I said, just no volatility at this point. Look at that. Just dead quiet. Well, as I mentioned, these yen pairs, I thought we were seeing more volatility. And look at this range. Holy smokes. We've gotten as much of a mover this is. Look at this. And some of the moves we've seen. We're trading in a 50 pip range, and it doesn't even look like that much. So on the upside, it's going to be back to this key level, the 43.81. And on the downside, 42.95. We did finally go and see the sterling knot, obviously on the backdrop of this Aussie weakness, make a run up here. You see we had the 90.58, that's the key level here. And we did go and get above that. We actually closed right, maybe just a couple pips above that, and we've continued to move just a little bit higher here. Looking as far as where this can go to. Remember, Aussie continues to remain weaker here. If we want to keep it pretty tight, it's going to be right there. 90.94. Actually been there. Let's see if we can open this up just a bit more. Right there, 91. Let's call it 91.20. And support. Right there, 90.35. 90.35. Right now, this is the most interesting one right here, which is sterling oil, because that has the potential now to go and drive right back up here. We'll go and move back into the majors. And we're just seeing real quiet activity. Look at the euro. I mean, just we're trading in right now is about, maybe about 15 pip trading range, if that. Look at that, how quiet it's been. And just on this range now, we've moved up in here. Like I said, basically about 15 pips. Just very, very quiet activity. Dollar index just easing just a bit back from that 97.69. You can see the resistance here on the 2 hour, but just gently easing. Same thing, only 10 ticks. And cable relatively quiet here. As I mentioned, we did go in and see a nice rebound here in equities in the Asian session. We've come back a little bit, but we're still above yesterday's highs at this point, and that's in the S&Ps. NASDAQ still holding up relatively well also after it moved to new highs. And lastly, you can see here with the Russell. It hasn't broken any new highs, but certainly can't say that it's completely fallen apart or anything like that. And gold rather quiet. But let's make no bones about it. It's the equities that are driving this market, and that's what's going to precipitate movement here. So probably going to remain relatively quiet until we get into the U.S. session. We get Bank of Canada, some other data out of here, the U.S. Those are going to be able to go and drive the market. And then, of course, tomorrow we have ECB day. That's all we have for here. Thanks for joining us here on a relatively quiet session here so far. Let's see, hopefully it lights up a little bit further. And once again, thanks for joining us here on the European Crossover webinar.